I'm Dean Buckley. I'm Chairman of Alliance Witan. 2024 was a significant year for the shareholders of both Alliance and Witan, and I'm really pleased with the progress that we've made. And I think we've delivered on pretty much everything that we set out to shareholders we would do. For Witan shareholders, they've got continued exposure to a world-class multi-manager proposition. So the combination represented continuity to both sets of shareholders. We said at the time, with a market capitalisation of around £5 billion, we thought that we'd be eligible for FTSE 100 status. And I was delighted that when back in December, we were elevated to the FTSE 100 index, which gives your company much greater profile. We also said that there'd be no cost to shareholders as a result of the combination. And this was achieved when we negotiated with WTW a fee waiver that covered the costs of the transaction. We also said that we'd lower management costs, and we've agreed a new fee structure with WTW that brings our OCR down below 60 basis points. We also said that both sets of shareholders would benefit from increases in dividends. And we've announced our full-year dividend of 26.7p, which is 6% up on the prior year, and our 58th consecutive annual dividend increase. I've also been delighted with the way that the market has received the transaction. Our discount has narrowed further, and right now the discount is 3%, which is amongst the very lowest in the sector. In 2024, we delivered a total NAV return of 13.3%, which translated into a 14.3% return for shareholders because of the tightening discount. Looking back on 23, we delivered greater than 20% return then. So over the course of the last 2 years, we've delivered a very good absolute return for shareholders. Relative to the benchmark though, 24 was a little bit more challenging. We were 6% behind and gave back pretty much all of the gains that we'd made in 2023. The board were disappointed with this, but we were also mindful that most global active managers have found the benchmark very difficult to beat in 24, mainly because the performance of the index was very concentrated in a small number of the largest companies. Over the long term though, performance is strong and we perform very well against our competition. I was also really pleased to note that the AIC mentioned us as one of the top 20 performing investment companies over the last 10 years. And also, mindful that it's the ISA season right now, they also mentioned us as an ISA millionaire.
Hello, I'm Craig Baker and I chair the Alliance Witan Investment Committee. Now, as Dean has alluded to, the last 3 years has seen very strong performance for the Trust. Over that 3-year period, we've outperformed the index, but we've also significantly outperformed the peer group. Be that the investment trust peer group, who we've outperformed by around 6% per annum, and also the wider Morningstar peer group, including open-ended funds, that we've outperformed by some 4% per annum. However, 2024 was a slightly tougher period in which to try and beat the index. Most active managers struggled in that period, and so whilst we were about in line with the peer group, slightly behind the investment trust peer group, slightly ahead of the Morningstar peer group, we did actually significantly underperform the index. 3 managers that did particularly well during 2024 were Sands, Vulcan and Lyrical. On the flip side, 3 managers that perhaps did less well were SGA, Veritas and Metropolis. What's interesting about that is that there's both value and growth managers in the strong performers and the weaker performers. So that wasn't really what drove performance, unlike what we've seen in a number of the recent years. Breaking down the performance in 2024 into a little bit more detail, what you saw was that more than half of the underperformance came from being slightly underweight the mega cap and large cap stocks that really drove the market over the year. But there were also some individual stock reasons for it. The biggest contributor on a negative basis was Nvidia. Whilst we've been overweight Nvidia until near the end of the first quarter of 2024 for some time, we actually moved to an underweight position at that point, and it continued its strong performance through the year. Other positions on the underweight side that hurt us were Broadcom, Tesla and Apple, the last two of which are stocks that we haven't held for quite some time. But it wasn't just underweight positions that hurt relative performance. There were a couple of examples of stocks that did particularly poorly that we were overweight during the year. One example I'll perhaps bring to light is Novo Nordisk. Novo Nordisk saw a significant fall in its share price on the back of some tests on its weight loss drugs. Now, our stock pickers feel that that was an overreaction and that these have got tremendous long-term growth prospects, and actually see the stock as particularly attractive today. And indeed, we added to our position in the second half of the year. So having focused on some of the reasons for the relative underperformance over the year, it's of course important not to lose sight of the fact that there were very strong absolute returns. So across the portfolio, we can list a number of stocks that really did well in absolute return terms for the portfolio. And the whole approach we tend to follow is that we have a lot of stocks with relatively small equal weighted positions, and a lot of those were delivering for shareholders. There were three changes to stock pickers over the period of 2024. The first has actually been covered in some detail in the interim report because it was in the first half of 2024, and that's when we replaced Ben Whitmore at Jupiter with Ramakrishna at Arga Investment Management. The other two are more recent and happened around the time of the combination. So the first of those is that we brought Jennison Associates into the portfolio. Now, this is a manager that Witan had been holding and a manager that we at WTW have liked for a number of years. We thought they're highly differentiated within the growth space, and it was a wonderful opportunity to bring them on board at almost zero cost because we could just bring across their stocks in specie. And then finally, at the same time, we decided to make a business as usual change from Black Creek, who'd been in the portfolio from the start of us running it in April 2017, and replace those with EdgePoint, a manager who we've known for a while and we think do some similar things to Black Creek, but it was an opportunity to address some more succession issues in place at Black Creek. So having made those changes to the manager lineup, we're particularly excited about how the portfolio looks today. It's a very diversified portfolio. As always, when you look at it from a top-down perspective, it doesn't look that different from the benchmark in terms of its country positions, its sector positions, and its style biases. But from the bottom-up perspective, it looks very different from a stock selection angle, and that's what excites us. So where does that leave us in the portfolio today? We remain underweight the Magnificent Seven, although even within that group of stocks, there's some were overweight, like Amazon. But it's actually the rest of the portfolio that particularly excites us going forward. We think that there's a number of stocks in the portfolio that have been delivering fantastic earnings growth, but that hasn't yet come through in the full share price performance. Now, that includes large names like Diageo and Visa, but it also includes some lesser well-known names out there, such as Silka, Roper Technologies, Intuit. We think there's a lot of latent value in some of those names, but we're not complacent. We understand that there are geopolitical risks out there that in some ways are increasing all the time. So we've got less leverage in the portfolio than we might typically have over a full cycle. And we, as always, keep the portfolio highly diversified and let pure stock selection drive returns. If you are interested in finding out more about the Alliance Witan portfolio, please visit our website where you can access the full annual results.